Hi, welcome back to Simply Accounting. In today's video, we will do a problem that involves revenues, expenses, and withdrawals. So let's get started. Revenues are any cash that is earned by an organization as a result of a sale of a service or products. Expenses are known as the cost of doing a business, or any cost that is incurred to operate the business. And withdrawals are assets that the proprietor borrows from the business. Okay, so in this problem, it says that Caroline M. Jones set up a law practice. So these are the transactions for the first month that she opened her law firm. So the first transaction, it says that she received $500 from the service that she did. So for this first transaction, we would debit cash because she is receiving $500, and we would credit $500 to service revenue because that is the money that she is receiving from doing her service. So the second transaction said that she paid rent for the month amounting to $300. So for this transaction, she is going to debit rent expense because she is paying for her rent, and you would debit it because to increase an expense account, you debit it. So you would debit $300, and then you would credit cash for $300 because you're taking cash out of the account to pay for your rent. So the third transaction said that she sent a check for $600 to a local utility company for costs that she incurred in the beginning service. So for this transaction, she is going to debit her utilities expense for $60, and she is going to credit $60 to cash because she is taking that money out to pay for her utilities expense. Now the final transaction said that Caroline borrowed $200 from the business. So for this transaction, she is going to debit her withdrawals account. Now this account is for if she's taking money out of her capital account for personal use. So they have an account set up just for withdrawals from capital. So she would debit her withdrawals account, and then she is going to credit $200 cash because her cash amount would go down because she's taking money out of the account. Okay, so after doing all the transactions, you will add up both sides of all the T accounts. So for cash, you add up the beginning balance for cash was $2,000, and then you add the $500 that she received from her service, and then you're going to add up all the credits on the T account, and then you get a debit. On the debit side, you get a balance of $2,500, and on the credit side, you get a balance of $560. So you subtract those two, and you get a total of $1,940. Now for service revenue, there was no amounts on the debit side of the T account, so you would just add up what was on the credit side of the T account, and you have a total of $1,300. Now for rent expense, there were no credits to the account, so you would add up the debits that you have. So it's $500 was the beginning balance, and $300 was for one transaction. So you add them up and you get a total of $800. You would do the same for utilities expense. You add up the beginning balance plus any debit to the account, and you get a total of $260. And for the last one, withdrawals, you have a beginning balance of $100, and she would draw $200 from her account, from her capital account. So there's a total withdrawals of $300. So let's recap what we learned. We learned that revenues are any cash that an organization earns from a sale of a service or a product. We learned that expenses are known as the cost of doing a business, so any cost that a business incurs to operate the business. And withdrawals are any assets that the proprietor borrows from the business. So I hope that you learned and understood everything that I taught you today, and I hope to see you next week on Simply Accounting.